Hi everyone, my name is Miles Durant, a graduating senior at North Carolina Agricultural and Technical State University. Welcome to a student's intro into alternative investments, where we have the opportunity to learn from current leaders within the industry. Today we are diving into the topic of fundamentals of alternative investments with Mr. Greg Mausz. Good morning, Mr. Greg. How are you doing today?
I'm doing great. Thanks so much for having me.
I'm so happy to be here, interview with you, and just really get to pick your brain about the alternative investments industry. I kind of was first introduced to it about a year ago when I first came to the ADISA conference. And it was kind of tricky really trying to wrap my brain around it and really truly understand how it impacts the overall financial world. So could you discuss about what alternative investing is, the pros, the cons of it, and just really what is it?
Sure. It's a big term, and it's a very all-encompassing term. But if we're going to try to simplify it, it's not stocks, bonds, and cash, or the products that are made from that. For instance, ETFs are generally groups of stocks. Mutual funds are generally groups of stocks or bonds or some blend thereof. It's other things. It's real estate. It's private credit or private equity. It is energy investing, both oil and gas and renewables. It's various tax strategies like 1031 exchanges. It's just not the typical stuff that you hear about on like CNBC.
Okay, and then how might a person go to discover or really break into it? Because I feel like this necessarily isn't talked about enough.
So when you're starting off investing, the normal investing, the traditional investments, the stocks, the bonds, the ETFs, that's basically where you need to get started. And you need to begin to build up your portfolio, your nest egg, get that type of experience. But there's also a lot of value in alternative investments. And, there's lots of places to get information. ADISA.org, great website. There's plenty of books out there. But there's people on the internet, on your YouTube shorts and your Facebook reels that are given tax advice, investing advice, and different things like that. Some of it's credible, some of it's not. But there's this whole network of financial advisors out there that are there to help educate, coach, walk alongside investors, and to help them construct a portfolio that can include traditional investments, but also alternative investments. You don't have to do this alone as an individual and try to figure it out. There's this whole network, whole community of financial advisors that are very trained, they're licensed, they're there to work with investors.
Okay. I know you mentioned all the different types of asset classes. How has that changed over time from the beginning of alternative investing, like how it started, and then where is it at now, and then where would you see it going in the future? Especially, I know AI is probably the hottest topic on the market, but how would that shake up the industry? Because I do feel like within this industry, specifically alternative investing, you have to be adaptable at really any given point and also mitigate the risk. So how would the history of alternative investment change from the beginning and also to where it is right now?
How most people get involved in alternative investments is real estate. People understand real estate. It's a very tangible asset. The business plans around a real estate fund are not that complicated, right? Some fund by a sponsor collects money from a group of investors, and it goes out there and buys property around a given theme or around a given geography. And when I say theme, think it's a lodging fund, or an office fund, an industrial fund, or a multifamily or residential fund. Those are kind of some of the big food groups. And those funds are used to construct a portfolio. And then all those sponsors do is collect all that rent, and manage the property. And then they pay out that rent in the form of generally monthly or quarterly dividends back to the investor. Now, the great thing about real estate and why it's such a good entry point is that it provides that current income, which people like. But there's also the potential for capital appreciation. Most of the time, historically, real estate has appreciated in value. So your money, I call it multitasking for you. You're getting current income and you're getting some capital appreciation potential. The other cool thing about real estate is that there is depreciation, which is actually a tax advantage. So there's this third component of tax advantages that either impacts your current income tax advantages or your long-term income with tax advantages. So again, I like to think of your money multitasking for you. And there's many different structures and alternative investments that allow you to do that. Your question was, how has alternative investments changed over time? It really hasn't. What becomes popular kind of ebbs and flows. Sometimes real estate's really popular, sometimes more private credit is popular, sometimes it's more private equity that's popular. Everything kind of moves in cycles. But having some exposure to a little bit of all of it is helpful because you never know what's going to be the next most popular thing. So again, having little bits of exposure to a lot of different asset classes and or sectors is helpful from an investing strategy standpoint.
I know you mentioned cycles and how cycles changes, and ultimately with cycles changing, that's going to cause the type of asset class you're going to invest in, your overall strategy, and just timing of certain things. And with that, how does alternative investing, the advantages of it and also the disadvantages change with those cycles?
There's liquid alternative investments. There's illiquid alternative investments. And as you mentioned, these cycles, sometimes you end up holding the real estate through the cycle. So if it's a real estate fund, and I'm just going to focus on that because, again, it's the most common and the most relatable to people. You're buying into a particular market, let's just call it multifamily. You're 2 years into the fund, and the fund value begins to go down because whatever's going on in the real estate market. But again, some of these investments are 5 to 10 year holds. And so you just kind of wait for the cycle to come back. And that sponsor is paying very close attention to that. And then they'll look to sell at the optimal time. And many alternative investments give ranges of when they'll experience the liquidity or experience a sale because no one can predict that future. So what it's helpful to do is to have lots of small bets because you don't know how the industrial cycle is going to be different from the multifamily cycle, how that may be different from the hotel cycle, and the real estate may be different than a private credit play. So again, there's all these different cycles. And it's just like stocks and bonds too. Sometimes tech really does well, sometimes defensive stocks really do well, but you just kind of ride those cycles out. But many of these are longer term investments, so you're not trying to time the market and say, okay, I want to be in here for 6 months and then get out. These are oftentimes, 4, 6, 10-year holds. So it's a very strategic decision. It's like a good anchor, a good foundation point for a portfolio where your stocks and bonds that are traded can be a lot more dynamic.
I know you mentioned cycles changing. How does the macro and economic forces that are at play affect how somebody might ultimately invest into alternative finance? Because I do know sometimes it might be a bad time to invest in real estate, it might be a bad time to invest in private credit, private equity. How might I go about it? And then also just the everyday person.
So let's talk the macro environment. As interest rates have been rising, and interest rates play a big part in alternative investments, it's actually slowed down real estate transactions and caused kind of prices to stagnate and fall. We're talking here in the autumn season of 2024. So real estate's kind of stagnated a little bit, a little less popular right now because of that. However, as interest rates have risen, credit products, lending products actually are paying higher rates right now and are actually a little bit more popular. So when you look at macro things, there is supply and demand. But there's also interest rates. There's also foreign influences. We are an ever more global society. So again, when I talk about how to get involved with this, it is lots of little small bets because there's lots of forces that are moving there. And again, some of these investments, the illiquid alts, are longer term holds. As far as getting started, I would look at liquid alts as a way to dip your toe into the water. And when I say liquid, there's some structures out there, and specifically the big REIT portfolios, non-trade REIT portfolios, non-traded BDCs, and interval funds, tender funds. They're generally larger pools of assets. They generally have roughly a 5% per quarter liquidity. So it gives people the flexibility to get out if they need to. Again, your alts allocation is going to be some like 10 to 30% of your portfolio, where 70% of your portfolio is going to be more liquid, more in stocks, more in bonds, things of that nature. So especially if you're younger and starting out, you want that flexibility of your money, whether it is a first child, first home, bigger purchases that you need to be using your savings for. You want that flexibility. So in starting out, I would go towards the alts that are bigger portfolios and that provide more liquidity.
My next two questions, they're kind of similar. I know you mentioned REITs. The average person probably does not know what REITs are or how to even break into that. So I want to know, how did you ultimately get started within the alternative investment industry? And then how could learning about alternative investments help make people make better financial decisions?
You bring up an excellent point. A REIT is a real estate investment trust. It is a special purpose or special tax classification that is designed where the REIT entity doesn't have to pay corporate tax. And it flows through all of the tax consequences and all of the income to the owners or to the investors of the REIT. But to qualify as a REIT, you have to own a certain amount of real estate, you have to pay out certain amounts of income to the end investors. But it's a real advantage, because if you were to own a Ford or GM or GE where they pay dividends, that corporation has to pay tax. And then those dividends get paid to you as the investor, and then you have to pay tax on those. The advantage of REITs is that they don't have to pay that corporate tax, and so it allows more income to flow through to the investor. So that is a real estate investment trust, or REIT. On the other side, there is something called a business development company, and they do private equity and private credit to U.S.-based companies. And they have the same type of rules, but also tax advantages where BDCs do not have to pay that corporate tax. Everything flows through to the investor. So thank you for bringing up to the fact that what is a REIT? And so I wanted to go ahead and explain REITs and BDCs, and you can Google those and learn a lot more about them.
How did you get started within the industry? Because people have to work their way up to eventually understand what a REIT is, and then how can better understanding the alternative finance market help people make better financial decisions, and ultimately how does that play a role within financial literacy?
I got started in the business as a financial advisor, and I wanted to make an impact with people directly. When you're in people's finances, it's a very personal thing. You end up having conversations around budgets and financial goals and family planning and things of that nature, and then you're trying to match up investments and portfolios with their needs. I eventually went from having direct clients to being on what they call the wholesale side of the business, where I worked with asset managers. And we would take strategies to financial advisors and kind of explain the strategies to them, and they would determine if they had clients that were suitable for those strategies. And so I've spent most of the last 24 years in and around the alternative investment space, working with asset managers and working with financial advisors. As far as getting started, I just started it was actually a real estate company, and they had REITs, and they had a real estate mutual fund, and they had long-term real estate limited partnerships. And each of those had kind of different risk-return ratios. So we would educate the advisors, and then they would make the decision to recommend or not recommend a particular strategy to a client. You talked about financial literacy, and there's lots of ways to learn about finances. Like I said, there's books, there's videos, but talk to financial advisors. Connect with one that is in your community where you can have the discussions. Pay attention to the news. You know, if you're really into finance, then maybe it's a daily thing. If you're not into finance, make sure you're checking in on some financial news once a week so that you understand kind of what's going on. I'm not a big fan of checking your portfolio every day. That actually can cause too much stress and distraction, but definitely be checking in on it monthly, seeing what's going on, see what type of adjustments you may need to make, have the conversations with your financial advisor. And if you have a good one, they're going to be working alongside you to help educate you. But there's lots of resources out there with investment firms, with asset managers, to learn more about all different plethora of strategies.
My next question is reading. Reading is fairly fundamental, especially in this space. And I read The Psychology of Money, and it basically said different people have different perspectives on money, which I can agree with. So how has being in the industry changed your overall perspective on money, and how do you use it kind of in your everyday life, both as an investor and both in personal use?
So really cool book and a really cool concept because, it basically says that how you were raised, it's your family and how your family viewed it, how your culture views it, how money was viewed on what's going on in that point in time of history shapes that psychology of money, and it ends up being very personal. So it's very important that you're self-aware on your view of money. And if it's a good view of money or a bad view of money, I mean, that's kind of subjective, but you need to be self-aware of that. And then also recognize that other people have different views. And can you learn from other people? So alternative investments for me, it's a great diversifier. There's something called non-correlation where the stock and bond market move in different ways. Sometimes the alternative investment, they move sometimes in alignment, sometimes not in alignment, which is good. One of Warren Buffett's rules is try not to lose money, or don't lose money, really. And when you have a diversified portfolio, it minimizes that downward draft when markets go down. Generally, not all asset classes move up and down in the same rhythm. Stocks may go up, bonds may go up, sometimes they're aligned. Alternative investments may operate under a different regime based on those factors. So it's very important to apply alts. I use it in my personal portfolio, again, to create that stability. I want to minimize losses, but then also create the opportunities for gains.
What does it ultimately take to be successful in this industry? Because I do know that the barrier to entry is quite steep. What does it take to be successful? And can you just talk about your journey from being a financial advisor to ultimately being on the board of ADISA?
No matter what industry you're going to go into, you're going to have to put a lot of blood, sweat, and tears in there to become an expert in it. And if it's the financial markets, you need to try to get as many designations as you can, as many licenses as you can, say yes to as many opportunities as you can to grow that knowledge base and experience. But it's not a 40-hour-a-week thing if you're going to be successful in any job. Singers that are big singers, that's not a 40-hour-a-week thing. They're putting hundreds of hours in. Doctors, attorneys, none of them put 40 hours a week in at work. It is a lot more than that. And when you're in your 20s, it's prime time to overinvest in your knowledge, overinvest in your career, overinvest in those credentials, and they will pay off for you over time. So my recipe for success is not just in the financial markets, or in the financial services business. It's really what you need to do in your 20s, no matter what career path you're on. I also say it's about relationships and networking. You need to get out there and have conversations with other professionals and ask some of the questions that you're asking me today and have them unpack it. And generally there's going to be nuggets that you can pick up from those conversations and then apply them. And, learning from other people's wisdom is going to jumpstart your career. If you can truly not make the mistake, but learn from other people's mistakes, that's just helping you climb that ladder ever so faster. And you also need to keep up with modern trends. Stuff that worked 20 years ago may still work today, but it may not. The world is constantly evolving. You mentioned AI earlier. That is affecting global markets, how people analyze investments, how people create investments, how people trade investments. And again, you need to stay up to speed on that because it's evolving people's careers. People's careers are evolving like no time before. Just we're more mobile as a society. Technology is allowing us to create lifestyles that we want, but also go deeper into specialities. And having specialized experience allows you to really optimize your income. When you look at a medical professional that's a specialist in an area, they often are able to charge premiums for that. Financial advisors that are specialists in some areas are often able to charge premiums for that as well.
I would like to circle back to where you mentioned some mistakes. Not everybody is perfect, and we're all human at the end of the day. So if you could tell somebody who is just getting started into the industry and also tell your past self about the journey you've been on, what would you say?
I would say when I look at a lot of my peers and how we've all evolved, you need to be very thoughtful about your career moves. You need to carefully consider where you're going. And there's two main factors to that. There is where does the company you're going to go work for fit into the major trends right now? You know, because you want to find a company that's on point, on trend, going in an upward direction. The next thing you need to drill down on is that specific boss that you're going to be working for. What's their mindset? How do y'all really connect? How do they see that role progressing? And does that align with what's inside you and your goals? And when you're starting off, you're going to have to pay a lot of dues, and that's fine. You should expect that. Drill down and work hard, but you still want to be working with a good manager that cares about you, that's helping you grow, and then on a company that is headed in the right direction.
Speaking about career advice, I am a graduating senior. What advice would you give to me? Currently, I'm a double major in both marketing and supply chain management, and I have a minor in finance. I've worked in the government. I have some experience with project management. I have some experience with, investing. I just have somewhat of a finance background. I started working, or you can call it interning, around 16, working at Woodfars Bank doing cash deposits, audit trailing, and everything in between. Interned at KPMG. So what advice would you give to me?
So think about where you want to head and make sure that whatever you're doing now kind of lays a foundation for where you ultimately want to go. Now, your career is rarely going to be in a straight line. There's going to be zigs and zags. There's going to be unexpected obstacles that come up, unexpected challenges. A new boss comes in, a company changes direction or merges with another company and it morphs. So, that goes back to having a big network so that you can pivot as opportunities come up or as challenges come up so that you can eventually get to where you think you're going and never stop learning, right? The jobs that you'll retire from may not have been invented yet, right? So, never stop learning and growing, and don't be afraid to pivot. That said, don't pivot too quickly. If you're leaving a job, try to make the most of wherever you are right now. Be the best at wherever you are right now. Stand out wherever you are right now. And developing that reputation and the connections that you come from that will follow you. You're building a reputational resume, and the people that work with you will remember that over the years. There's a lot of people that work for different sponsors here over the years in the alternative investment space. And they know the type of people that they want to work with at the next company, right? Because ultimately, if you're on a team in a company, it's how can we work together to achieve a goal so that we can get a bonus, right? So naturally, we want to work with people that we believe that will help us achieve that goal and or that we enjoy working with. Be a good peer, be a good teammate in your career, and that will pay off over the long run.
Thank you for the wonderful advice. What does ADISA stand for?
So ADISA has evolved over time. It's actually had several different names. ADISA has pivoted as the alternative investment industry has pivoted. It currently stands for the Alternative and Direct Investment Securities Association, which is very all-encompassing of all the different asset classes, strategies, structures, and things of that nature. So it is geared not towards individual investors, although there's great educational material out there in the resource library. It's really geared towards financial advisors and helping them be the best financial advisor they can be for their investors. When I'm oftentimes talking to financial advisors, I applaud them for their work because as they work with people through retirement, it's really their financial advisor and their doctor that control the quality of life past 60 years old. How many financial resources they have determines how stressed they are, how long they're working, how many vacations they're able to take, what they're able to do and support their kids or grandkids. But that financial advice is critical. Just like you have to be healthy to enjoy your money and listening to your doctor and having healthy habits. But it's really your doctor and financial advisor that are impacting the later half of your life.
Thank you. I know we're getting towards the end of our discussion. Do you have a question or two for me?
I don't have a direct question for you. It's more of a question for you to think about. As you're planning out your career, some people say follow your passion. And, that can work, but sometimes your passion is not always where you end up having your vocation. So you can find fulfillment in life outside of work, through hobbies, through relationships, through other adventures. But you don't always have to align your work and your passion. It's great when that happens, but they don't always have to align. No matter what job you have, there's always going to be aspects of the job that you like and you don't like. There's always going to be people that you like and you don't like. You're on teams right now, you have classmates right now that you like and don't like. That's kind of a universal principle of dealing with humans. So, be careful not to idealize a situation or a career or a job. Realize that there's going to be good and bad wherever you go. So think about your passion, think about where you want to go, but realize the job may not always be meeting all those needs, and that's okay.
Thank you so much, because that's kind of where my headspace is at right now. I'm really trying to figure out, do I want to go the corporate route or forge my own path, and really just seeing the benefits of both. I know there's good things about going corporate. There's also bad things about corporate. There's good things about going the government route, and there's also bad things about that. So thank you for that wonderful advice. And then also thank you all for tuning in. We're so glad you joined us for the insightful conversation on the topic of fundamentals of alternative investments with Mr. Greg Mausz. If you enjoyed this episode, please subscribe to our channel, and we'll be right back soon with more expert insights and student perspectives on alternative investments.